All right. Good morning, everyone. It's fired up here. Exciting day ahead of us, probably. Very happy to be here this morning. Got the S&P 500 on Friday that crashed into the close, not quite, but did come down convincingly. We're testing around flat line with 2 hours left to trade. Traded down about 0.5%. So we did give up a little bit of the gains from Thursday's session. And Nasdaq traded almost back down the flat line, but we had tons going on. Obviously, kind of following the ECB announcement, we had UPS. It had earnings, shocking announcement, which I actually think is shocking for the global economy. But then we had a couple other guys that were better than expected. We also had McDonald's trading in the red after earnings. Earnings season to me so far, I haven't seen the statistics on it, but it doesn't seem like it's definitely been up to scratch. So, at some point that'll start to weigh on the markets if it continues to follow through. Asia this morning, we had Australia that was closed. Other than that, it was a total non-event. I mean, markets were pretty much all flat. I mean, looks like the Nikkei is down a lot, but that's down 0.3%. So, the way that we put it on there, it just looks a little bit more significant. So down 0.3% only, and the Nikkei is the biggest loser on the day. So there was, very little leadership, obviously, and I think they're also still kind of waiting to see how Europe and the U.S. react today. To me, today is almost kind of as big as any day. We had the initial reaction out of Europe and the States after the QE bazooka that we got from Draghi, but then now all of a sudden we're sitting in a place where that was the initial reaction, but what's the market really going to do, kind of thing, and I think today and tomorrow are absolutely huge. So just watch obviously very attentively over the next couple of days. See what risk assets can do. See if there can be any follow through. To me right now, what has me, I guess, the most on edge and the most bearish about this whole thing is commodities. Is that the reaction out of commodities is not anything close to what we saw out of the States when we saw quantitative easing before. We saw a real push higher in physical commodities. We saw probably a 3 or 4 day push higher in the global diversified miners, and we saw a 1 day bit of a push out of those miners, and then literally on Friday they imploded. I would assume they're going to get hammered again today. I mean, you got copper absolutely puking here. You got oil moving toward lows. So definitely not the reaction that the ECB wanted out of commodities in order to start to stoke inflation. Right. Getting on in the chart of interest, we're actually going to show two charts of interest today. There's just so many good ones around. This one, to me, is just amazing. I saw this. When you look at crude oil inventories at the moment, crude oil inventories are absolutely enormous, and this is worldwide. I mean, in the States, you got the highest crude oil inventories in like 100 years. There's a hell of a lot of oil around, and all these guys have been taking supply out of the market lately to store the stuff because we've been in contango. So the fact that those front month crude oil prices are still so significantly higher than spot crude oil prices means that they're just going to be stockpiling is literally until they run out of storage. And then I think once we get to that point, that'll probably be the point where we start to make a turn. When there's no storage left, then the producers are going to have to back off bringing the supply into the market. Once that happens, then you actually it'll give us a slow phase where we can start to build off the bottom. I don't think that that's happened yet, and that's why I think that crude oil can continue to come down. I think we're going to see a 30 handle in crude oil, especially light sweet, in the next, I'd call it next 5 days even. I think we'll see a 30 handle in crude oil, and I think this thing gets really, really messy before it starts to have a bounce. All right. Next chart of interest we'll look at here are the Greek 5-year CDS and 10-year yields. To me, I think this is massive. Obviously, we had the Greek elections last night. If you don't know what's happened there, you're not paying attention. So they, the radical left party won, and right now we're waiting to see if they are going to have an outright majority. From what I'm reading and from the reliable news sources is saying that it doesn't look like they're going to get outright majority, which is definitely a more positive for the market. if that's the case, then I think most of the pundits are kind of saying no Grexit. So bottom line is this is what we're going to want to watch. This is for the next couple of days. This is going to be very important for us to watch. That's a 10-year yield on the Greek bonds and the 5-year CDSs. So just keep or any CDS, Greek CDS for that matter. So just keep an eye on that space. That's going to be really interesting over the next 2 or 3 sessions. Right. So today in corporate action, we've got Texas Instruments in the States as well as Microsoft after the bell. If I'm not mistaken, Apple is tomorrow after the bell as well. Today going ex-div, we've got NTC, PFG, and TON, so just keep that in mind if you're playing any of those stocks in the open or throughout the day. All right, market data today, very little to look at. We have the Japanese trade balance this morning, looking a little bit better than expected. We've got the IFO business climate numbers out of Germany at 11, and then we've got the Dallas Fed manufacturing activity numbers in the States. So not a whole lot to look at there. Like I said, we're going to be following around risk indicators the entire day to see whether or not this market's going to be able to kind of hold the premiums that we put on after the ECB stimulus announcement, and if not, if we start to drop the lows from last week, then I think things can get quite shaky. All right, let's get into the maps. First thing we're going to have a look at this morning is the ALSI. So what's also interesting about this, if you look at the ALSI here, and draw this however you want to, draw it from I'm going to draw from the wicks. Sorry about that. I'll just get that back. You can see that on Friday session, we came up, the Thursday and Friday session for that matter, we popped up and really tested resistance. This resistance level has been holding. This is on the daily, 1 year. So we've been in quite a consolidation from the ALSI here. Actually, just draw it like that. But we've been narrowing out as we get further out to the right, and we failed it again on Friday. To me, it's starting to look convincing. So I don't see any reason why we can't come down and test down at least to around 42,000 on the back of that failure to get through. We've gone back and forth up and down to these levels several times now. Don't see why it can't happen again. To me, we're set up to move that way. Commodities really look like they're failing. And what's different, I think, this time is because the gold price is holding up reasonably well, and obviously yields are falling everywhere around the world. The rand is actually held up a little bit. So that's one to keep an eye on. If we can keep this up, I think we're going to be able to test those lows in the ALSI. All right, now we look at the US dollar rand. You can see here we've popped down last 2 or 3 sessions to test maybe 1136, 1137. That's major dollar support, rand resistance. And like I said, you can see very clearly here that we're going to have to pop through that level before we can really make a test of this trend line, which would probably take us down to about 1115 if we get through. So we can pop through 1136, 1137, and we could get as high as 1115. I don't see any reason why we're probably going to get through that at the moment, but just know that it's there. All right, we're going to look at bulletins here. Like I said, we had a big failure across all mining stocks pretty much on Friday. Sasol was a bit of a laggard. I think it's probably going to be an opportunity today on the short side if you can get it out at the right price. But failure here out of Billiton off of resistance, definitely looking a little bit bear flaggish. Anglo's looking totally bear flaggish here, dropped out of this bear flag on Friday. Still very steep, but failed at resistance hard. We showed that on Friday as well. This resistance level here at about 199, just couldn't get a close above that, even though we were above 203 on the session on Thursday. Then we reversed off of that, closed down about 199. Then Friday, I don't think it ticked up the whole day. Amplats, one of the reasons why Anglo's is so weak, shocking numbers. The other session blamed it on the strikes and the other issues that they'd had. But you can see they're failing hard off of the 390 level, and this thing is also looking very much like it could fall into the bear flag camp. We've still got a ways to go. I would say that we've probably got to get below at least 360, if not in the 355 level, but definitely, looking like it could start to break down as well if it gets below that level. Sasol, like I said, shaping up to me to look like a bear flag on this pattern. To drop out of that today, I think would be very bearish. I think we would take out lows if we drop out of that pattern today. And to me, obviously, with the oil prices coming down, we're testing all-time lows. Like I said, to me, everything's on the wall for this thing to trade down into the 30-odd, to the 30 handle in light sweet crude. If that happens, I don't see how Sasol can hang in here, and I think it's got a lot of downside from here if it does. And the last one we're going to look at is Woolworths. All the interest rate sensitive stocks have traded incredibly well, as they should be probably. We had such a drastic shift in interest rate predictions over the last month and a half. So because of that, obviously, the interest rate sensitive space trading really well. Woolies may be giving us a chance to break out, to buy again on a breakout. I just need to have a look here at the 2-year, because I don't think I looked all the way back there. See if there was another test up at this level. No, there's not. So, wherever you want to look at, between 81.50 to 84, wherever you'd like to call that breakout, somewhere in there might be a decent little place to have a nibble. ShopRite also giving us a nice correction on Friday. Some of those stocks open up, low and hold nicely on support over the next session or two. They could be the ones that'll pick up the slack out of the mining space, and kind of the money that's rotating out of that continues to rotate out of those mining stocks could end up moving into some of these interest rate sensitives, or continue to move into the interest rate sensitives. And that's it for today, guys. Good luck out there.